How has the biotech market fared through this market crash?
Not well.
Okay.
Biotech's been crushed because biotech is the paragon of we don't make money today companies. Biotech, they're all companies that are developing potentially breakthrough, world-changing drugs and therapies that are going through clinical trials, and it's all about what those drugs, the monetary value those drugs could produce in the future. So how you calculate the valuation for those companies is it's 100% reliant upon future cash flows.
Okay.
And 0% reliant upon what that company is doing today. So clinical stage biotech companies, biopharmaceutical companies have been hit exceptionally hard by the recent market sell-off. And I think that's creating a pretty good buying opportunity in that sector because the technicals and fundamentals are lining up pretty positively.
Can you talk a little bit more about the technicals and fundamentals and what you look at when you're evaluating the biotech sector?
Right. So fundamentally speaking, something like 86, 87 biotech stocks are currently trading below their cash positions.
Okay.
Meaning that there are, let's call it 90. There are 90 biotech stocks in the market whose current market cap is less than the amount of cash they have on the balance sheet.
Okay.
That is ridiculous. And it's an all-time high. We only got to about that number, the number of biotech stocks trading below cash value. Historically, it's peaked at 20.
Okay.
Back in like 09, it peaked at 20. In like 2020, it peaked in 20. Back in 01, it peaked at 20. So even through some deep recessions and deep market routes, the number of biotech stocks in the market trading below cash value never peaked above 20. And yet today we're at 90. We're at 4 or 5 times that. So I think that's a pretty compelling fundamental case for why biotech stocks are pretty oversold.
Okay.
There's also a pretty compelling technical case. I can share that chart with you.
Sure.
Going to my cool little new chart sharing screen. Let's see here. Let me pull up the XBI, which is a biotech ETF. Right, so here you go. So we can see this chart here. You got a good view of it, Aaron?
Yep. We can see it. Good. Yeah.
Okay, so there are 3 things we're looking at when I see XBI today. Right here, this white line. That's the COVID-19 support line.
Okay.
So we fell to about 69 bucks and change. Let's call it 69 flat during the March 2020 sell-off in the biotech ETF. Today we're at 67 and change, so we kind of broke below it, but there is definitely some strong support right around that upper 60, mid 60 range for XBI. So you got the COVID-19 support. That's the first level of support we're looking at. The second is these oversold conditions. So as you can see on the relative strength index, the RSI, we've dropped into oversold territory here in early May. That's only happened in not just oversold. I mean, we're clocking in at, 25. So pretty substantially oversold.
Okay.
That's only happened 3 times, well, actually twice before in the history of this ETF, as you can see, going all the way back.
Yep.
Once was in early 2016 when there was a bunch of worries that the government was going to press up against biotechs and really stop them from price gouging. And that correlated with a local minimum in the stock that turned into a pretty big rally. Or the ETF, it turned into a pretty big rally. Then it happened again in late 2018 when we had a very similar market crash that we're seeing today, a Fed-driven market crash. We've talked about this before. Again, that correlated or coincided with a local bottom in the ETF that led to a pretty big rally over the next year. And so we're getting that oversold condition again down to this 25 handle. history says this should coincide with a local minimum that leads to a pretty big rally over the next few months, maybe a few years. And then the third thing we're seeing in the technical pattern is if we look at this uptrend that the ETF has formed all the way back to April '09, so the depths of the great financial crisis. We have a pretty solid uptrend here. A very solid uptrend. We got the lows are connecting here. We got the highs are connecting here from, summer 2015 all the way to early 21. Got this pretty solid uptrend. And we're running into support right now, that uptrend, which clocks in right around 65, 66. Coincides really with this kind of COVID-19 support line. So right in this area, right in the 65, 66, 67, 68, 69 area, there is a lot of technical support for the biotech ETF to bottom, reverse course, and stage a pretty big rally. I think things look good for the biotech ETF. I know we talked about recession indicators. I know we talked about economic slowdown. Things are getting pretty ugly.
Yeah.
But this is one of those things where it's just fundamentally undervalued and technically oversold to a point where it might work even if the economy continues to struggle over the next few months. So biotech's a place that we're starting to get pretty constructive on at the current moment, for sure.
Thanks for watching HGI Clips. For the full episode, head on over to our sister channel at Hypergrowth Investing by clicking the link in the description, or listen to the podcast on any of your favorite streaming platforms. We make new episodes every Wednesday, so make sure to check it out and subscribe to never miss any of Luke's Hypergrowth insights.